Welcome back. Prakash Diwan is joining us. Before we go to Prakash, just was looking at this month's top gainers, and the top four names should really be very interesting. We have JP Associates, Suzlon Energy, GTL Infra, and Dish TV. I mean, just saying the kind of market that we're in. Prakash Diwan, as I said, is with us. Prakash, good morning. Thanks for joining us. Of course, aside of that, we have a lot of other stocks doing well as well. I wanted your thoughts on one stock which has made a big comeback. Haven't discussed it since it's no longer in F&O. NCC, erstwhile Nagarjuna Construction. Big move on that stock this month, up 32%. Any thoughts here?
Good morning, Anuj. So, I completely agree with you that these are, stocks like NCC are the ones that will probably be participating in this new leg of small cap, mid cap, up move, for the simple reason that the market is seeing such active rotation. And, some of the infra names which we have always been kind of skeptical about given their working capital cycles and, regulatory overhang, have actually benefited from this largesse that the government has finally kind of got a slightly more liberal with. Okay, and as I think we approach Jan, Feb, March, you'll probably see a last hurrah of sorts in terms of the government spending on this. So a lot of these contracts which these guys have, because they have great order books, and this is one company that had actually done a lot of repair in the last 2-3 years in terms of their asset shift, will probably, stand out, and they will gain market share. They'll be able to participate more actively in tenders which come up in the subsequent financial year. So I think it's definitely worth looking at some of these infra names. Whether you want to look at NCC specifically or some of the largest offerings, that depends on your allocation towards small caps and large caps. But I think it's a name that definitely has seen a lot of the bad news and all the negativity priced in, and it's probably consolidated well enough to see the next 20-25% up move in the next 6 to 12 months.
Okay, all right, Prakash, good morning. I must ask you about one stock which is on our top 10 list today, and it's Tata Motors. Because now there's a lot of optimism that this Brexit is happening, at least with some sort of a deal. It's not an ugly Brexit, and that takes care of a lot of worries. The stock has already rallied, almost 175 now. Your call?
So, good morning, Sarvi. Yes, I do agree. It's a little bit of a relief that, you finally have a Brexit deal. But most of us haven't really been able to decipher whether this is really great in the short term, or it's only going to be just kicking the can down the road and then revisit it after a couple of years. But Tata Motors, the dip that you saw in anticipation of the second wave in UK particularly, was probably the opportunity that you could have got into, because I don't think life changes dramatically just because UK and Europe have kind of decided to sit on the same table. But because Tata Motors, particularly JLR, has business profile that's much more dependent on so many other geographies. So my reckoning is that it probably doesn't really change too much for Tata Motors, except for a sentimental positive that you could see in the prices today. And the market is in that mood to reward any good news. But I don't think you could buy into it just because of this. The key out there, and I keep on pointing this out, is their ability to get into EV vehicles in a much more stronger, faster way in India than anybody else. And that will be fairly transformative, according to me, Survi. So I would wait for those indications rather than just this Brexit news flow.
Okay, there are some new EV launches that JLR has planned in 2021. So let's see how that shapes up. But let's do one thing. Let's go across to Mangalam now. He has something on his list in our new segment, Momentumizers. Mangalam, what do you have?
Well, the stock that has been a momentumizer is BEML, and that's the one that I have on my list today. If you just take a look at the moves, last week it was 7.5%, this month it's 36%. And from the start of November, the stocks actually rallied 62%. And the one thing that really displays the momentum of the stock is the way the moving averages have moved. The stock is currently at close to 984 rupees. The 20-day moving average is at 792. And what's interesting is all the near-term moving averages are much above the long-term moving average. So the 20-day moving average above the 50-day moving average, which is above the 100-day moving average, which in turn is above the 200-day moving average, which is at 631. What further cements the momentum that we're witnessing witnessing in the stock is the way delivery volumes have moved. On Friday, it was close to 6 lakh shares marked for delivery. Last week, average daily deliveries were close to 3.6 lakh, which was higher than the average for this month at about 2.31 lakh, and the highest that we've seen in the last 2 months, where the average was 1.7 lakh shares per day. So last week's delivery, in effect, was double of what we saw in the last couple of months. And finally, we have some fundamental triggers as well. The company has won a fair amount of orders in the last few months, not only from the government, but some private sector defense coming in as well. And that brings us to the second point, that everyone's betting on the capex cycle recovery. And the third point, of course, for all the PSUs, extremely important, divestment. So let's see whether these triggers play out, but the stock definitely showing a fair amount of momentum.
Okay, the stock is showing fair amount of momentum. I wanted to, in fact, toss this question to Prakash. Prakash, I know for a fact that you're not a big fan of stocks like BEML, but the momentum has been very strong. Would you ride on to these fancy stocks, or are you a bit cautious here?
No, I think, Sonia, there was definitely a lot of value that BEML offered when we saw this, in the dip. It was almost in its 400, 500 zones. And from there, the stock has re-rated. Of course, historically, we've also seen 1800 plus on this name, and that's why 1000 probably looks not out of reach of such. So I'm quite positive on the government's ability to monetize a lot of these assets, and they will have to. Today the situation of the government is the back is to the wall. There's not much you can do. You can't increase taxes. You can't do much to kind of incentivize capital formation unless you do something to get your balance sheet in order. And that's where the likes of Concor, BEML, all of them will benefit. In fact, I believe Concor is one of the most underrated assets in that genre, and I would put my money on that because it's yet not participated in this optimistic move that some of the other names like BEML have. So yes, you're right. I do like the story, but everything is good at a price. It's probably run up a bit too much for the moment.
Okay, since we're on the topic of PSUs, apart from Asian Paints, which has in the index been the stock of the month, the other two stocks of this month have been ONGC and GAIL, both up nearly 20% this month, Prakash. Some bit of renewed buying coming back, and I don't know after how many years I've seen this kind of move, but would you buy any of these stocks, even if it's for dividend yield or anything else?
Anuj, GAIL is one of the top picks that I have in the current juncture, and we've been recommending this to clients at sub 100 levels as well. And look at the way it's bounced back even after this sharp cut on Monday. The delivery mark was actually much more superior than the averages of the last 8 weeks. The simple reason being, where do we stand on a structural theme for gas? There is no doubt that the government is pushing for much more greener usage of fuel, and gas, for example, is being even touted as to be used for industrial units in Delhi and all. Because of course the issues are much more compounded and intense out there. But globally as well, if you see the ESG wave that's likely to come is going to favor gas over so many other things. So my sense is very clear. The message is very clear. Gas is definitely a big theme for the future as a fuel, and GAIL has invested so much into capacities that they're not able to utilize it given the confusion that was always around on the tariff systems. Now that's got unified, that's got sorted. End user industries are all kicking well, whether it's fertilizers, whether it's power, whether it's even steel units which have started shifting to that partially. So I'm very sure GAIL is going to get re-rated. You'll be surprised at what kind of numbers they can clock the next 2-3 years, and that's what the market will reward it for in terms of the visibility of earnings. So yes, GAIL definitely stands. ONGC, I don't have such a positive view because it still has a very strong regulatory overhang in terms of pricing mechanisms that the government could administer.
Okay, so that's a view on some of the gas stocks, GAIL in particular. But right now it is time to bring you our promised special segment.